time to go inside out on Carnival Cruise Lines after the company reported its earnings. Ivan Feinseth, Senior Partner, Chief Investment Officer, and Director of Research at Tigris Financial Partners. So glad you are with us. I mean, if anybody's been paying attention, they've seen you on for years now talking about this group. I mean, Royal Caribbean, I just am looking, and that I don't think that was your favorite. It went from $31 to $285. Carnival Cruise, I think you definitely. It is? Okay, Carnival you always like too, I think. I don't know, that went from $6 up to $28. So you have been on board, no pun intended, for these cruise lines. Tell me now about Carnival today as it raises its outlook and its quarterly numbers beat the street and it's gaining 9.1%. Your thoughts?
People love to cruise. First of all, since the pandemic, consumers have reprioritized spending on travel, no matter, and foregoing spending on other things. So travel is a priority, and the cruise industry is on fire because the cruise industry is growing with the addition of new ships. The cruise operators are focusing on these land-based destinations like the upcoming Celebration Key from Carnival Cruise Lines, which opens next month, and the tremendous success of Royal Caribbean's great Perfect Day at Coco Cay. And now Norwegian has made a significant commitment in upgrading their private island in the Bahamas, Great Stirrup Cay, which should open, the renovation should be done this winter by the end of the year. So the cruise industry just offers a tremendous value for your travel dollar. And there's such diverse choices and itineraries, so there's something for everyone.
Yeah, I mean, it certainly seems obvious, like a great choice. The price point, sometimes people like that, the future bookings, the private islands, the excursions, the newer ships. Are they all doing this? Are they all sort of very competitive with each other?
Well, I think that the industry is more competing with land-based vacations and gaining share overall in the vacation market. The cruise industry is 2% of the travel market, 7% of the vacation market. So there's huge opportunity, and it's a $2 trillion and growing market. So there's a tremendous opportunity for all of them to gain market share. Ongoing innovation, the ships just have more features on them and more to do, classes, visiting different ports, entertainment, food, buffet, specialty dining. There's just so much to do, and you could, however number of people you have on a ship, you could have that many different vacation experiences. So there's so much that they offer. And as I said, people are prioritizing spending. Even in geopolitical situations, they're saying, okay, well, we still want to travel, and it makes it more so. So consumers are spending, people are retiring with more and more money. The wealth effect from the stock market is driving people's discretionary spending, especially on travel. So the industry has so many tailwinds.
All right, let me jump in here. There were a few things that I did want to talk about. First of all, tariffs. I mean, there was some concern that the cruise lines might be charged, not based in the U.S. Are we concerned about that hitting the bottom line? The other thing is not at all. Okay, so that's good. We'll put that aside. Not at all. You'll tell me when that is time, and you'll come back on and explain why, if that is to come to pass. Also, the spending that goes on board, maybe folks don't have as much to spend, but cruise lines can also adjust, right? They have some leeway. If they have higher costs, maybe they don't serve the caviar, they serve shrimp. Or, I don't know, popcorn shrimp. They have some leeway, right?
So many things they can vary and still maintain or create new experiences. And by the way, the sweet spot, the most profitable and fastest growing part of the cruise industry is luxury and ultra luxury. So the bigger ticket cruises, bigger ticket cabins, all kinds of upgrades are selling. And onboard spending remains strong.
No, very exciting. Of the group right now, and I know you've liked the group and they've done incredibly well. You've done incredible with this call because many people have come on and been naysayers, and you've called this right. We did have some volatility throughout this year, especially April, etc. Which names, what's the order if I wanted to put money to work? What's the order of the cruise lines for an investor right now? Which one's the strong buy or the buy?
Oh, my strong buy is Norwegian. It seems to have been lagging, but they have so much going on. I think that this upgrade to Great Stirrup Cay will be a big boost, and they have the biggest increase coming as a percentage of overall newer ships. So they will see, I think that they're adding 10 more ships over the next 10 years. So, and by the way, it takes 5 years to get a cruise ship. So you have measured capacity growth and huge barriers to entry because there's only about 5 places in the world that make cruise ships. And it takes about 5 years from concept delivery to get a cruise ship. And Norwegian has the biggest cadence of new ships coming. I like Royal. Royal is entering into the very profitable river cruise area. They're launching 10 river cruise ships and making a significant commitment to river cruises, which tend to lean toward a higher end consumer and higher per ticket spending, and so that's going to be a growth area for Royal. Royal has done incredibly well with Perfect Day at Coco Cay in the Bahamas. They have Coco Cay, Mexico coming. They have their Royal Beach Club in the Bahamas coming, so that they can combine these land-based experiences and really control the quality of the vacation experience.
It sounds so beautiful. You certainly make it enticing, no doubt. Ivan Feinseth, Tigris Financial Partners, great to see you, as always. Thank you. Let's go ahead and trade Carnival Cruise. Tom White, host of Fast Market, is with us, and you have an example trade for us on not just on one, but on a couple of these names. But let's start off with Carnival, which had a beat and a raise on the quarter. Your thoughts?
Yeah, the stock's popping on the back of that news, and if you look at their bookings, they're in line with what they saw last year, but their costs have come down a little bit, so their margins are starting to expand a little bit. So I went a little bit more aggressive with this one. It's a lower price stock. If you think it's going to continue to move to the upside, this strategy takes advantage of it. I looked at a combo. It's sometimes called a bullish risk reversal, where I'm going to go out to the August monthly cycle, so about 52 days to expiration, so giving yourself a little bit of duration. And we're going to buy the at-the-money 26 strike call, and then to help finance the purchase of that call, we're going to sell the August 25 strike put. You're going to pay roughly a debit of anywhere between maybe 40 cents, 75 cents, and that takes your break even up to $26.75. So you don't need that big of a move, but 70 cents from current share price in Carnival to get profitability on this. And everything on the upside's profitability above that break even. Now, between the 26 and 25 strikes, your risk is the debit that you paid on the spread. Now, where do your losses come in? That's below 25, the 25 level where you sold that short put. So you've got to be willing to buy the shares if the stock does fall below 25 into expiration over the next 52 days. So you do have a lot of risk if the stock were to somehow go to zero. Keep that in mind. But this is a bullish risk reversal combo trade where you're using the short put, which is neutral to bullish, to help finance the purchase of that long call, which is bullish.
Understood. You also have, and I'm curious whether or not you've ever done one of these publicly traded cruises, but Royal Caribbean, what about that one?
Yeah, I am not a cruise person at all, Nicole. I like to travel overseas to big cities and stuff. But that being said, this is an area. And one of the things that I think we leave out of this conversation is the fact that oil prices have fallen from $78 a barrel down to about $65 a barrel today over the last couple of days. So that helps margins immediately, right, when you see the price of crude oil and fuel start to drop. So I think maybe that was lending some support. So RCL hitting all-time highs today on the back of that Carnival Cruise Lines earnings report. Now, they report earnings on the 24th of July, so I want to avoid that earnings event, but I can still take a directional bias. I looked at something a little bit more conservative than the Carnival trade, where I'm going to sell an out-of-the-money put vertical. I went out to the July 18th monthly cycle. so 24 days to expiration. We're going to sell the 275 strike put, and then against that, we're going to buy the 265 strike put. So a short $10 wide, neutral to bullish put vertical here. You're going to collect roughly about a $3 credit on that. That's what you can make on this trade, about $300 per spread with $700 in risk. But it does take your break even down to 272 over the next 3.5 weeks or so. So you take advantage that the stock maybe will consolidate, maybe go higher. It can go even a little bit lower, but you want it to remain above that break even to 272 over the next 3.5 weeks on this one.
All right. Good to see you, Tom White. I've never been on one either.
Yeah.
Just never really came up. Maybe in the future one time.
Yeah.
All right, Tom White. Thank you.
Thanks.